Hey everyone, have you ever heard people say inverted yield curve predicts recession? Today let's decode why in simple terms. Typically, yields on longer maturity bonds are higher than the ones on the shorter term bonds. This is because they factor in higher credit and inflation risks for long term. This just becomes opposite when the yield curve inverts. Let's break this down. The beginning of most economic crises starts with high inflation or excessive leverage. Here we start with high inflation. Firstly, when there is high inflation, the central bank raises policy rates, which are short-term rates. So short-term yields rise because they form the basis for short end of the curve. Long-term yields still don't move up because they still reflect the long-term growth and inflation expectations. Now, what are the bond investors thinking? Bond markets usually move ahead of the economy. These investors already anticipate economic slowdown and then rate cuts. And we already know when rates go down, the value of bond goes up. So the long-term bond holders make mark-to-market gains. Also, when there is an uncertainty, there is often flight to safer assets, due to which there are more investors buying long-term government bonds, which compresses the long-term bond yields further down. Now let's look at what is happening in the underlying economy. When short-term policy rates increase, they make borrowing more expensive for businesses and households. Businesses in turn cut down on their expansion plans and hiring. This impacts the job market. On the other hand, higher rates means higher EMIs for households, and this reduces the credit demand. This impacts the economy and causes a slowdown. So now the important question is, does the inverted yield curve predict a recession or causes it? My answer is, it's a mix of both. Now, why is this a very important source of information? It is because it shows expected growth and inflation all packed into one curve. That's something equity markets can't show directly. So remember, inverted yield curve doesn't guarantee a recession, but it tells a deep story that is very important for all of us to understand. Thanks for watching. See you next time.